What's going on, guys? This is the DeFi Crypto Alliance show where we are doing our best to be the bridge between our fellow real estate investors, entrepreneurs alike, and the cryptocurrency space because make no mistake about it, crypto is the biggest opportunity over the next few years, and it's not even close. So we're pumped to have you guys along this morning. Corey, take it away.
Absolutely. Corey Geary here, and just truly blessed every day I wake up and get to be alive with my beautiful family, to build business and hang out with you guys and use cryptocurrency as that wealth creation tool. And they come back and smack it on the back end with a nice wealth preservation in real estate. And so, yeah, just having a lot of fun. This is open mic today, guys. We want you to guys come on and rap with us. We will love to come and talk about crypto, about money, about real estate, about onboarding, whatever you got. You could even talk about, diversification and other assets if you want. We don't care. We are open. Just come on and talk, and let's get the show on the road. It's going to be a beautiful weekend this weekend. I'm excited.
Absolutely. One of the things I wanted to start with today, Corey, that I think is really an interesting talking point, and you're seeing varying opinions on Twitter. So there's what appears to be a lot of news indicating that the United States government is going to print money to stimulate the economy next year. Oh yes, Brad, come on. We'd love to have some TA stuff to talk about
Oh, I
too.
love that, Sprack. Oh my gosh, yeah, we haven't had a good TA session in a while, and I really want to get one on Pulse, and I want to go deep, and I want to use the fibs and everything. So hook us up, bro.
Absolutely. So talking about the U.S. Economy being stimulated with the money printers next year.
Yeah.
Some people are thinking that's super bullish for crypto. Others are feeling that's really bearish. Where do you stand on the topic, Corey? What are your thoughts? And you
You,
guys post in the comments. What do you think?
yeah, man, I'm starting to get more and more to the point where I think this time is not going to change. Like, how everyone's thinking this time is different. I'm starting to lean towards the direction that this time is not going to be different. It was funny because I like Hans. Hans is a really good TA guy. He's real down to earth. If you ever see him on live stream, like the guy has no emotion. He's like a robot. He's just like, I think it's probably why he's so good at TA, right? Like he's just so even keeled. But he was posting on Twitter today, and you might want to look at that post today. And he was talking about housing, and he was talking about how the housing crash won't happen until 2025, which I was saying Q4 of 24. So I'm not too far off. He might be right because he posted some charts to represent his conclusion. I tagged Colin Talks Crypto because I really respect, and I think he knows what the hell he's talking about. He's one of the more authentic guys who's not just out there trying to pump and dump and shill narratives. I think he's a legitimate dude in crypto. And so I tagged him and I said, hey man, what is your thought about this? And he's like, yeah, man. He goes, they can inflate the dollar all they want during the election period and then basically dump the markets in 2025, which, I mean, God, it would make such perfect sense. And it lines up with all the market cycle BS, and it lines up with I mean, I just think it's really highly likely that, Biden and all his crony friends do inflate the dollar to oblivion next year and try to buy your votes and make the economy look like it's doing something spectacular. And it's hard to say, they're good at one thing, and that's kicking the can down the road. They love kicking the can. And so that's all we're doing here is you're going to be kicking the can some more. That means you better get your buys in, and you better get long and get some exposure, because when the crash happens, man, it's going to be the longer they kick that can. I feel like the deeper the crash can go, right? Like the deeper the incision into the economy can happen. So you're going to want to, get in there and create some wealth, so that way you can come in and take opportunity on that big giant incision to the economy, right? If you have this massive crash in the economy, you're going to want to be cash heavy. So make some money now while we have the opportunity during this bull run, and take profits late 24, early 25, and have that money ready for that crash. because that could be like your serious legacy wealth opportunity, where basically we'll be getting kind of like two bull runs. I think like we get a bull run right now, which is normal to the market cycle, and then 2025 comes and we have that deep incision into the economy, and then of course there'll be a bear market, and then you'll have another. You're going to have a very, like everyone's saying, oh, this is the last mega bull run in crypto. If this happens and we have a deep recession and a deep like freaking crash in 2025, you're going to get another massive bull run in crypto after that's done.
That's a good point.
You're going to get something spectacular, and it's going to be more than what this bull run is. And so like that whole narrative is thrown out right out the window. Now, whether it follows the 4-year cycle or not, I have no effing clue. Like that's all on the table. But man, you better bet if you get a deep recession in the economy, when you bounce back from that, risk on assets, including the stock market. If you got stock, you'll have stocks that'll do 20, 30, and a 50x out of a recession coming out of that. What do you think crypto's going to do? I don't. Even Bitcoin, you might have an opportunity to pick up some really cheap Bitcoin if that happens, and be able to get some serious gains on that asset. Maybe this is all speculation, right? We're just dudes on the internet. We're not financial advisors. Go buy bonds. Go talk to a financial guy, and we're gonna go over here and we're gonna speculate on this stuff. This stuff is great. But yeah, this is a great post. Really got my juices turning this morning. I was like, man, maybe I'm a little bit early on my thinking, and maybe, just maybe, this time is not different.
Right. Well, and the concept you were talking about just barely, it's the same idea of like washing out the weekends in crypto, right? Like you need to wash out the weekends before you could go up. It's the same thing with the economy, where if you had a big like washing out in 2025, then you could give a lot of room for it to go up and go pretty sharply in a short period of time, which is pretty interesting. I'm telling you guys, you owe it to yourself to change your finances next year. You absolutely do. Because if you do not do it this next year and this plays out kind of like we're talking, we're not financial advisors, it could play out differently. But if you do not change your financial trajectory this next year and we have a bull run in 2024 and you don't take profits and you change your life and there's a correction in 2025, you're going to feel the pain. You're going to feel it in a really big way. And so make sure that you're placing your bets wherever you feel like they may be. Like Corey said, go buy bonds, if you feel like that's the game. But man, huge opportunities coming in 2020.
I know where I'm placing my money, Dane. So that's all. I know where my money's going, and I'm gonna have a blast. In fact, to instill some confidence in where my money is going, we got the man, the myth, the legend coming on. This guy, I feel like, is a grade A TA, Mr. Sprack Burger here. What's up, my man? Can you hear us?
Hey, how's it going? Yeah, I can hear you guys. How you doing?
Man, I like the PDF there, or the picture you got. It's good. It's fire.
Yeah, it's fire. Well, what's up, guys? You doing okay?
Oh, we're beautiful, man. To start off, what's your thoughts of the post from Hans today?
Okay, so I didn't really read too much into his post, but if he's looking at property markets not crashing, because that's kind of like the last sector to crash.
Yeah, he's saying 2025.
Yeah, so it would make sense that we have a bull run first in the higher risk assets, and then in the equity markets, and then in the residential markets like housing. So that kind of that totally makes sense. And yesterday's or this week's Fed meeting gave the market like the green light that they're going to start trimming the rates next year. So that market's trying to front run that, and it's usually the effects of trimming those rates doesn't happen until many months later, if not years later, because it takes years for them to build that up. They're not going to just trim rates right away. They're going to trim the rates, and then they're going to see how the market reacts to it. and they could pause again, then they could trim rates and they could pause again. And they're basically going to sort of DCA into the rate that they're trying to get to. And at that point, the market's already made all its money. It's peaking. It's at a new all-time high. And then you'll see a correction.
Interesting. Man, that's exciting.
But it's going to take them a while to do it. It's, obviously it took them a while. It took them years to increase the rates to where they needed it to curb the inflation rate to the CPI numbers, at least the ones that they made up. Right. And then it's going to take them a substantial amount of time to go the other way around. And like you said, it's an election year. People want things to look good for their cycle. It happened on the previous administration as well. But I'm not sure how much of that is spin versus actual activity, meaning like the Chairman Powell, he was there like during Obama, and I think he was there during Trump, and I think he's there now. And he's been, in my opinion, and by the way, he's a Republican, and he's a capitalist. So he's, he, in my opinion, he's been kind of like deaf-eared to any of the administration's guidelines or policies or pressures. And he's got one job and he's sitting down and he's doing it. So I don't think it's a manipulation type of policy that he's doing. What I do think is that there is spin in terms of what the media will say, that, oh, the economy is good because such and such person is in power. And I don't think that's true. We saw that with the Trump administration, because Jay Powell, did the Fed put, and he bought up the stock market, printed a bunch of money, and Lord Trump took credit for saving the economy. He was our our Christ and Savior, at least. I'm neutral on the guy. I'm not getting political. I'm just neutral on the guy. But he is who he is. He's a brash individual. He's going to come in. He's going to take credit for things. He's going to say, I am the greatest. I am the greatest. Right. And then he's going to take the opportunity of the market condition to say, oh yeah, that was all me. I did that, and he gets to, be the greatest president that ever existed. So I do see something similar that may come from the Biden administration, where if there is a recovery, if there is some sort of a uptick in performance, if the jobless claims are low, and inflation is coming down and things like that, you'll see the same thing. The Biden administration will say, hey, yeah, that was all us. We did that. And it wasn't. It was Jerome Powell. It was Jerome Powell.
Right. That makes a ton of sense. What are your thoughts on Colin was talking a little bit about, it's looking like the S&P very well could go ahead and make a run to new all-time highs. This is all kind of in alignment, in my opinion, with what you see, where the market can be unrealistic longer than, how's the saying go? It could be more unrealistic longer than you can be liquid.
Yeah, it's irrational.
That's what it is.
Longer than you can be solvent. And
yeah, that's it.
And that phrase goes back to futures traders from the 1920s, and when you're taking contracts, they're on margin, and so you're holding this bag, and you're in a leveraged position. So like the market could liquidate you because your solvency, your liquidation rate is well beyond what the market's irrationality could be. And it happens every day in crypto and stocks and in the CME. But yeah, that's the case.
Right. Would you love to see some charts if you're willing, Sprack? Love to
Yeah,
see your thoughts on the S&P 500. I think, in my opinion, love to see what the charts have to say. But I think that we have I think we have a run at all-time highs in the S&P 500. This is all part of the irrationality of the markets. Like you said, they're trying to front run the Fed signaling loosening of the money printing next year. And I think we're going to see that here in crypto as well. In fact, Drew is asking, what are our thoughts on RH assets? We can go and look at some charts on those as well if you're willing.
Yeah. I'm not sure if you guys can see my screen.
Got it. Chad's in the comments. He says, my version is I can be retarded longer than you can be solvent.
This is true, and it's more true in crypto than any other asset. If you think about it, like right now it's meme season, so like all the meme coins are running hard, and that lets you know that we have gone through one of the phases of the bull market where the liquidity cycles, and Bitcoin takes a little pause, a little breather, a little pullback. And then you see the liquidity flow into like the major alts like Ethereum, Solana, AVAX, some of the top contenders. And then it cycles into the layer twos, and then finally it gets into like the meme coins. And then the meme coins right now are just exploding. They're just skyrocketing. And so this right now, whoever made $1 million on Bonk, that person is likely taking profits and cycling back into all of their blue chip layer ones, all of their like Bitcoin and positions, or they're just putting it into cash and saving it for the next shiny new object and the cycle rotation. But what's interesting about this cycle compared to previous cycles is the amount of tools available for people to scan the market and look on chain to see what's happening. People are front running each other's wallets. There's like scanners that will, go find like some influencer on on YouTube and find out what his wallet is. And then what they'll do is they'll set alerts and try to buy the coins that person is buying just before they go on YouTube and talk about them. Right. And so as they're talking about them on YouTube, the price is just starting to rocket. And then that's when these people are starting to sell that position into that strength. And so the game is substantially different now. Also, there are, let's say, 3 to 5 times more participants on this cycle than there was on the last cycle. And the real retail FOMO hasn't really kicked in yet. It's just all of the guys that did well or didn't do so well, or maybe they observed it on the last cycle. Right now, they're really paying attention. And this is early. This is kind of like if we were back in the end of 2019, where like, Hex was barely starting to get its big run. And like some of the smaller low liquidity tokens were still asleep, waiting for Bitcoin to cross that halving. And I think we're seeing that line up with some of this macro cycle and whatnot.
And we're feeling that too. Like it's really interesting going and talking speaking at the events that we're speaking at. You're feeling how a lot more people are paying attention now and they're watching, but most absolutely still sitting on the sidelines.
Yep. Yeah. So the first chart that I like to look at before I look at any of this stuff is I'll look at the dollar index. And so the Dixie, we'll look at it on like maybe like a daily time frame, which is a little say. So the Dixie was printing green in these bands, and there was a big flush. Obviously, the Fed pivot rates and things like that. I was watching this trend line here where we had been trending down for quite a bit. We hit this pocket of support from back in this area. So, we're obviously going to get a nice little bounce up there, bounce up there, bounce up there. And then it kind of broke up above, just in case of some risk off type of situation, but then right back down again. And so it's flipping red. It just flipped red like not too long ago. And it's started to trade below this really long-term 200 week moving moving average, and it actually rejected off of it pretty nicely, and it's coming back down to attack this support level. And what I do know about some of these support levels is that once they've been hit a number of times and they never cleared the previous high, they are likely to break down under them. And so I'm going to be watching this level, the $100 level on the Dixie. This is going to signal like a massive sell-off of the Dixie and a massive rally in asset markets. And then I'll be looking for this longer weekly trend line that's coming from all the way back in, I believe, November of 2020. And so we could get back down into some of these $90 level Dixie levels. Yeah. And so, okay, dollar's trending down. That means
finally something good I can feel bearish about.
Yeah.
Like
yeah,
I feel
no.
bearish about it, and I'm like,
Right.
this feels good.
See,
Like,
when this thing
my crypto, it's a
yeah,
triple
when this thing
bottom,
flipped
straight
red,
support, like, oh, God.
like on the weekly here, we're starting to compress on these channels, and it hasn't quite flipped red yet. But once it flips red and trades underneath this this moving average, you're going to see a pretty extended bear market in the Dixie for quite some time before it starts to stabilize and react. So I see the very beginning of that.
What was the time frame? That was June to, that was like a full year when it flipped red previously to where it started trending back up again, it looks like.
Yeah.
Right?
Yeah, and the Dixie is a mammoth chart, so like not to be taken lightly. Like each one of these candles is not to be taken lightly, because this is trillions of dollars. This is macro as macro as it gets. You're talking 5 to 10 trillion per day of liquidity going back and forth between whatever the Dixie's composed 50% euro, like 10% is the Japanese yen, and then there's gold, and then there's other currencies and other assets in there. So if you're moving one of these candles down substantially, like we had a flush this week, so this week was a big flush. This right here just equates to trillions of dollars moving around, and we're seeing again these money flows, right? These money flow indicators are now trending down. We're starting to bleed into the red, and we're starting to trend down into the red, and we're getting these divergences. All we need is one more print of the divergence, and we're going to head down. So I'm bearish on Dixie. That tells me we got risk assets, at least until we get down to something around here mid-February. We'll take a look at it again, see how it reacts to this big long sort of support area from the past. But it could blow through it again, because we've already hit it once, twice, 3 times, and we keep making lower highs and we keep making lower lows. So this to me is a downtrend on the Dixie. That means risk on. You guys are going back to the S&P. Yeah, we're basically kissing that all-time high, and these channels are in expansion mode, which means that they're not going to stop anytime soon. I don't consider this in a resting period until you see the channel start to compress like this and then flip gray. So I'm seeing them kind of like they're starting to open up, and you're going to see another bull trend happening soon. We had a little bear market here where we had the reddish zone, and then now we're getting a nice big candle. If we print above this level right now, it's testing all of this this pocket of liquidity that's been sitting here for a very long time. There's people that are like, okay, when it gets to here, I'm going to sell because they've been stuck in this position for something like 2 years or so, or a year and a half, and so they're going to be up there, especially if you're older, you're in retirement age, boomers. Boomers are going to be doing some movement, and especially because rates are still high. So rates are still high. They're going to move money out of their stock portfolios, move them into like they're more of the stable assets, the bond assets, especially if they see the Fed pivoting soon. If they see the Fed pivoting soon, they're going to say, look, these rates are not going to be here very long.
Yeah,
let me do some profit taking and put it in a long-term asset. At least it could, and then the younger folks, we're going to be like, no, we're going to participate in this event, and we're going to say, look, if this candle closes up above this area, takes out this liquidity that's sitting right here, we could retest this area as your previous resistance. this now becomes your support in the future. So, you come back and you get rejected off of that. Remember, profit takers always at the all-time high. There's always profit taking. It's going to reject, come back, touch this area one more, and that's your launch pad to go. And I think we see that early next year.
Yeah, that's a massive candle for the S&P 500 right there.
Oh, it's huge.
It's crazy. Huge. That's so much money.
It's huge. Yeah. That's
hitting all-time highs on all the indexes.
NASDAQ is already touching the all-time high. Dow Jones Industrial Average already at the all-time highs. Oh. And I was looking at Boeing stock. Boeing stock is absolutely ripping.
Yeah.
Ripping. Boeing is a very good indicator of the overall market because it's the airlines, right? And so like who's traveling, they're tied to everything. They're tied to oil. They're tied to manufacturing. They're tied to, just logistics, travel, how the economy's doing. Are people traveling? And so if people are traveling, then the airlines are actually booking flights. And if airlines are booking flights, they're going to order airplanes. And so if they're ordering airplanes, that means that the Boeing earnings is going good. So Boeing's stock is going through the roof. And so remember, it was hit the hard. It was one of the stocks that was hit the hardest during the pandemic. Right here, this is March of 2020.
That's nasty. Oh my God.
It got hit really hard. And so, some people saw this as an opportunity to pick up Boeing at $100. It trended into the red. It didn't flip green until recently. And so you could have bought all this down here and that would have been cool. But it would have been a nice trade if you were looking at this all-time high with this trend line here that's kind of riding and then finally breaks up above it, comes back and retests something. This would have been a nice trade here in October. In October, again, we waited for all of this garbage of the Fed and all of the high interest rates. And then now that we're seeing kind of a light at the end of the tunnel, these bands are flipping green, and I see Boeing coming back to its all-time high.
It's showing on all the charts. Looking very similar.
Yeah. The other one I'm watching really hard is Coinbase. Oh my God, this one is going to be ballistic on the next cycle. I guarantee it. Look at this long-term downtrend. Obviously, we had it launched at the bear market. It was actually a top signal for the crypto market.
I remember that.
Yeah, April of 2021, and then it sold off, and then just kept selling off, and then it bottomed out right here, and so this would have been a good time to be accumulating it. But I'm looking at this long channel, this long downturn channel where we kissed it, traded under it, and then finally broke above it. Do we get a pullback up to this? I don't think so. I think maybe this is hitting resistance at the moment right now. That's why I have this level marked right here. So it's going to it's getting a little bit of maybe sideways action for a little bit. So you'll have a little bit of time to accumulate this asset. But in my opinion, the risk reward ratio for this, we're looking at, a 5-to-1. If it gets, to where I think it's going to go, I have a target of about, $800 for this asset. Why? Wow. Because during the print of the stock, when it IPO'd, Coinbase was making $3.6 billion a quarter. Wow. And that was during the frenzy of the last bull run. And so we're going to get into a bull. Remember, stocks print on earnings. So the earnings is where like the boomers look at, if I'm going to buy this company, it's got to be able to pay itself off in 10 years. And so they look at how much earning potential, what's the cash flow. And that's that's typically how stocks are evaluated. So we'll look at Coinbase participating in the next run. Think about this. FTX is out of the way. Binance is almost out of the way. Kraken is small. Who's left? Coinbase is going to be the only game in town.
It's going to be
who's handling all of the asset management for BlackRock? Coinbase. Who's handling all the asset management for Grayscale? Coinbase. I'm conservative here. All I said was a double, from its previous all-time high, like a double. That's it. That's all I'm really,
You're going to get crypto gains here.
You're going to get crypto gains for sure on a boomer stock. Yeah. Especially again, because we're having ETF, right? So there'll be some exposure to the crypto market. You'll be able to buy Bitcoin and possibly Ethereum on this next cycle through your traditional asset. But you're like, well, what else can I buy? Well, you could buy this Coinbase stock. Well, what does it do? Well, you get all the fees from the trading. They're like, okay, so now you've got another very big, very stable, very secure exposure to the market. If you're, and again, I follow the boomer money as well too, because they have most of it. Let's just be honest. You know, and they're smart individuals. They and they hire people to do this stuff, and so they're not messing around. They're gonna make money on this next bull run. I guarantee it. And so like some of my more traditional accounts like the IRAs and stuff like that, I'm putting Coinbase stock in there, and I did the grayscale trade this year. I think I was pretty transparent with you guys. I was buying the Ethereum at 50% discount to NAV instead of the grayscale product. That it's a bit controversial. I know some people don't agree with that, but I did it, and I'm already like doubled on my position just by taking advantage of the discount to NAV, because the discount to NAV was 50%. Right now it's at 8 or 9%.
Hey, Sprack, so I have a few dollars in TD Ameritrade that I haven't really done a lot with. And so like it'd be interesting to pick this up. Would you think right now you'd buy here, or would you wait for some kind of pullback?
So I would break it up into several purchases. I would say
DCA. Yeah, that's always the answer.
I would say buy a little bit now, because look, okay, we're at a resistance level. Okay, so you're right. We could get a pullback from here. So I would buy some now, like break it up into maybe 4 or 5 or 6 different tranches, and you'd buy like a little bit now just to have some exposure to it, right? If it breaks up above this level, then you're going to wait for a pullback to this level, and so you buy it again at the same price. Yeah. And then if it pulls back from here down a level, then you would want to buy it once it recaptures this previous high. Yeah. So you'd be looking at the 114 level. So at the 159, and then at the 114, and then obviously if it dips further into this longer trend line, then you kind of buy the hell out of it.
Yeah, that's deep. So, deep. Yeah,
deep at it. If you get it at $100, if you could get Coinbase stock at $100, that's a great value. That's where you put the rest of your capital.
And you think it's going to go 700 or 800? God, like that's better than Bitcoin and Ethereum from these levels. That's good.
Yeah, because like how much can you make on Bitcoin and Ethereum on this next bull cycle? Yeah. I do see Coinbase outperforming Bitcoin on this next bull run. Just FYI. Yeah. I mean, and there's people that are looking for exposure to traditional markets, and this is a great way to do that. I was looking at where is it? ETH. Okay, so here's the Ethereum Trust. Again, it's starting to curl up, and it broke up above. This is a great level that I was watching. It finally broke up above this gap. All right, so it filled the gap. Right, and when it did that, now you have a support line underneath it, and so the support line underneath it is now your new support. So you get a pullback into that area, and you could basically test that support. And then look, it tested it really nicely last week, and so it's just going to follow this trend line up.
Candle.
Yeah. I mean, this is just indecision. I mean, it could go sideways for a minute, but it's like, again, people see Ethereum skyrocketing, and the only exposure that they're going to have is this grayscale product. And this is about to flip green, and this is on a big, massive weekly chart. All right, we flipped from red to gray, and now the expansion is happening. The expansion, I think next week or in the coming weeks, we flip green, and then that's when you're going to see a lot of boomer money come in, especially in a risk-on environment, right? Because it's stocks first, and then they say, okay, well, 2-3% exposure to this new asset class, which is how most of the traditional finance guys do it. But we are above support.
That's
We
our
are
retail
in a
money
bullish
coming in.
uptrend, higher highs, higher lows. We are expanding into the green. I'm checking off all the boxes. And so this is how a traditional finance person would think. And look, we've just printed above this 200-week moving average.
Yeah.
Not too
That's what I
massive.
wanted to ask, where we are above the 200 or
We are
at the-
massively above the 200. Not only that, but if you
Uh-huh.
look over here at the RSIs, we've been trending here, and the RSI is a little bit oversold, so but it's been above the moving average as well on the RSI. So the stochastics look good. Yeah, we printed a red dot here on these money flows, but look, we're trending up into the green, so the money flow's coming in, and it looks like we survived this kind of a bear market here in this red. Anyway, that's kind of how I look at the Ethereum trust product. And again, there's a discount to NAV. I wonder if ETHE
Net asset value.
discount to NAV. So you'd want to go to Y Charts. Y Charts has some pretty good stuff. You could sign up if you want. But I was buying this product throughout the year, and I was getting 50% discount to NAV on the Ethereum product. Now we're at about 13-14%. So there's still some meat on the bone. You know, you're getting a 13% discount on the underlying asset on the Ethereum that's actually in the trust, because I think it's 1,000 to 1. So for every Ethereum that they hold, there's like 1,000 shares of stock. And so you're still at a 14% discount. So if you did want some exposure in a traditional, like if you had an IRA, or if you had some sort of like a Roth account, and you're like, hey, you know, a safe bet that Ethereum is going to perform this cycle, you know, here you go. And a safe sort of prediction that Grayscale is going to get an approval for an ETF. If this thing flips into an ETF, you capture this spread immediately.
Yeah.
So you make 14%, like right there.
I like the Coinbase trade better, to be honest.
Coinbase trade is great. I'm giving
Coinbase
people
trade
options.
Juicy,
You mix it,
man.
mix the bag, however you want to mix the bag.
Yeah.
You know, I would.
I guess I got a couple dollars in TD Ameritrades just sitting there. I was duped into the AMC thing about a year ago, and then I got out of it. And I got some money in there from that. Everyone was saying AMC was going to do the GameStop play, and so I still got a few dollars in there from that. And I think I might take your advice on the Coinbase.
Hey, this is not financial advice.
This is not a financial
I can go buy
advice.
bonds. I can go buy bonds, and
I told you to rub your face with your money and burn it to the ground.
He just showed you a picture with colorful lines. That's all that happened here.
Yeah.
Okay, it's not a financial advice.
What? Sprack, what do the RH assets look like? How are we looking on
All right.
those?
Let's see if I could share the
false, man. That's
share this tab instead. Let me share what's happening over here on the RH, because I have been paying attention to that. I'm all over the place, guys. But you know.
No, this is great.
You're
It's
a
cool to be
TA
able to
guy,
get an
man.
overview of the markets in general.
Yeah, it is because again, look at that liquidity flow where Pulse is a new coin. It's getting its first cycle. It's gonna perform later in the cycle. So what do you do in the meantime? In the meantime, you make money off of things. So I did like what was happening this week. I know I got way too many lines on here. Let me do something here, because I want to make sure I could see what I'm doing. All right. Can you guys still see that?
Yeah.
Yep.
Okay. All right. So yeah, retouch this trend line. Beautiful bounce right up in there. But again, it caught this pocket of resistance above. Obviously, that's going to be a place where price will react to it. And then came back down again, and again held the support. So now it's coming back up to attack that level again. And just basically, I see this channel sort of as trending up. If we can get above this level, then and close above this level and maintain above that level, then it's kind of like, okay, that's, onto the next boss. And then, that you defeat the next boss, and then you defeat the next boss. And one of the things I was noticing yesterday was the Fibonacci levels. So if you set up the fibs from the recent bottom, which is here. Where did it bottom? And the all-time high up here. Let's see, did we do something? Okay, I think I have a stochastic overlay. Okay, all right. So if you look at, let's do this. Let's get rid of that. I want to do something with the fibs. So we hit this all-time high, and then we bounced off this level here and kind of trended above it. So that's kind of like our floor. We didn't go below that. And if you look at where these lines are lining up, the fib 236 level, this is right around the SAC rate. This is right around the sacrifice rate. And then this area here, the 382, this is like where we peaked out at this channel. And then this is the 50-cent mark. And so there's actual resistance levels at the fibs, like right along the fibs. So I'll pay attention to these. You'll get reactions from these as we crawl back up. But yeah, I definitely see this thing as we bottomed out. We're starting to trend up. We're following those trend lines. I've been buying every week. So
do you see it going down again anymore?
No. And
I mean,
not
an all-time low, but like another, like maybe to touch one of the other higher lows.
Yeah. What does
so
that
I was looking at this.
look like? Oh, look at that. That's interesting.
I was looking at this. Let's see if I could do this. Yeah. Okay. So here's what we have. We have a bounce here, a bounce here, a bounce here, a bounce here. Could we get resistance and come back and touch this level again? Of course. And it might even be a good thing, because you have a pocket of resistance above you here.
Sure.
And so we're getting a rejection there. But if we trade above this level and use this as our support, then we're going to go and attack. We're going to go and attack the next level, which is this guy here.
The next boss.
Yeah, the next boss. So you're just defeating bosses, and then once we clear this area, which we talked about, once we clear the 238, it's going to be a lot easier because there's a big liquidity gap between here and like there was here. So here there was a lot of trading activity. In other words, there was like some sort of a
that's when I was buying, unfortunately.
Fair market value distribution accumulation, which is okay.
You're not the only one. You're not the only one.
No, I bought here too. And then it dipped, and then I went hard, and then it dipped, and I went hard, and just sort of DCA'd. Yeah, I mean we all did, but you got to look at also how we've been trending against this bear market. So we had this drop, and then here's where like the first cross. All right, so that's phase one. Then we had this one. So then here's phase two, and then here's this one. So it's phase three. So we're crossing phase three, right? And we're using the backside of it to test. And so now we're gonna set up a new high, and that'll be our next phase. And so, like you said, there's these trend lines are also levels of resistance as well.
Of course.
They're just like they're just diagonal, and you could say that we've been sort of we're in an accumulation phase, if that makes sense.
Yeah, it does. It does. It just seems like we're getting ready to pop out of it though here real shortly. I mean, maybe in January, maybe, I don't know. It's looking like it's coming. It's looking like it's coming to an end in the short term.
Yeah, and how many days have we been?
A lot down there. Yeah, that's been a while.
How many days? This is how many? 240 days.
Crazy.
Sorry, 200 days. So we've been down here 200 days.
From to where we are is 200 days, right? We've been in the low since August.
Yeah. We've been in the low since August. So I don't know what
money will come to our system as well at some point, because right now all the bigger accounts, influencers, they all shilling, they all tokens, whichever they have interest in. But as soon as the puff runs out, from all those pumps, then people are gonna look for new places to put their money. And I think that Pulse Chain and Hex, they have a strong chance to be the
Yeah.
next one.
Yeah, definitely. One of the things, because I do pay attention to every ecosystem, and one of the things I notice is that there's certain narratives that tend to create pumpamentals, and one of them is airdrops. Right now there's like airdrop season. So like Solana, Injective, AVAX, Phantom, all of these ecosystems are doing like these massive airdrops. And what it's forcing people to do is to go and buy the asset and then stake it on some DEX or some DApps, and then you'll get like this free money. And then what you could choose to sell it, you could choose to keep it staked and earn more. And then what ends up happening more than likely is that participants will take their asset and they'll sell it, but they'll end up buying back the original layer 1 token in that ecosystem.
Yeah.
And so
It's
they're
always
doing,
the core value.
they're doing a reverse sacrifice. They're like giving you the money now and then for free, and then you go and dump it, and then what happens is they get like free advertising for their product, and then you're like, hey, well, what is this thing that I'm oh, well, this is Aave's version on AVAX or Solana or some of these other chains. And they're like, oh, okay, well, how do I participate in that? And they're like, well, okay, well, you can yield farm. They have Rocket Pool and Lido, and all of the cool DeFi stuff that's on Ethereum is now on these other chains. So we have it on Pulse Chain as well. Pulse Chain's got a lot of cool stuff too, but everybody's been building in the bear market, and we're just starting to see a lot of this stuff come out. So it's gonna get pretty heavy. I'm balanced. I'm hedged. I take profits from other ecosystems and I roll it into the Pulse Chain ecosystem, and that's my play. So I'm up pretty substantially on some of these other tokens that I bought during the bear market, and so I'm just rolling those profits into this ecosystem, which I think is just gonna run later, in my opinion. And obviously we've got FUD from the SEC, and whether or not they served Richard, they could say they did, even if they didn't.
Right.
And there's some controversy to that. And the bottom line is that at some point, it's all going to blow over, whether there's a settlement, whether there's a fight, whether there's a win or at some point.
You better have your bags packed.
It's all going to be settled. And then there's going to be no fear of the unknown. And that's when I think this market's going to take off, because as we've seen before, and you could kind of decode this in some of the interviews and some of the messages, when a founder really wants his project to succeed, he will make it so. And we've seen it before. So, does actions speak louder than words? Track the wallets. What have the wallets done in the past? What are they likely to do again? And what are they here for? They're here for glory. They're here for performance. They're here for whatever they said that they were here for, right? And so, like the conversation has never changed and has never shifted focus. And as a matter of fact,
somebody like Richard, like you're talking about, is still engaged. Like I love seeing old Richard in the Ledger tweet yesterday.
Oh, I know.
He's like,
it instilled confidence.
That sucks, like we're here.
He grabs every opportunity.
It took me right back to 2020. It's just like time machine to the past.
Right. But Gary dropped this video. Let's share this one. Kind of like you're saying, Sprague, people have been building in the bear market. Let me know if you guys cannot hear the audio. Let me go and play it real quick.
Listen up! I do not want points! I do not want motherfucking points! I want responsibility! Airdrops! cold hard motherfucking cash so I can taste the goddamn fucking liquidity. I cannot pay my bills with motherfucking points. I cannot take my points to the motherfucking bank. Enough with the engagement farming bullshit. I want that goddamn money, and I got that goddamn money right fucking now. And it better be a fucking lot, not 5 figures. It gotta be in the 6 figures at the fucking least. I'm a good motherfucking user, baby. A good motherfucking user, and I deserve this fucking responsibility. I've been clicking and clicking and clicking all through the bear for your product market fit, baby. Do not forget that. Do not forget who pays your fucking bills. Devs, loosen up.
This is the guy from yesterday with the ledger.
Yeah.
You remember
the same
Dave?
guy.
The guy with the ledger, and he
I've
told
been
them,
clicking all fair market. Don't forget who paid your bills.
he was like, "You have one job, ledger. One job."
You guys see the one where he was running around like the airport saying, "Look at all this future exit liquidity." It was,
I gotta start following this
Gabriel's-
guy. This guy is freaking hilarious.
he's hilarious.
Man.
Yeah, Gabriel's a good sentiment. Like he's part of like the meme culture. I mean, he ends up getting the reference pretty often. You know, he was slashing around with machetes like a year ago or whatever. So like he's a funny guy as far as sentiment. But you know, I'm glad that you played that. It is it's interesting about like the culture of Hexagon, the culture of Richard Hart, the cult of everything in this ecosystem, cult and culture. You see these references often. Obviously, we have had people like Eric Wall or whatever be kind of like the anti-Christ, I guess, of the
Erica Wall. Sorry,
Yeah.
I need to correct you there. Erica Wall.
yeah, but
Her name is Erica Wall.
he laces these things that, again, Richard's talent may be the best talent is to distill complex ideas into, you know, 5 or 6 words. He really condenses those things and they become picked up like, you know, longer is better and bigger is better and all these other kinds of narratives that we've heard for over the years. So I see it now, especially and I hear it almost all the time in every major crypto Twitter space today. And it's interesting. Somebody's been making content about like, here are top signals for Bonk. Here,
Yeah.
you know, I see people retweeting stuff, and yet, you know, Rand says, Rand now, or his, you know, Crypto Man Rand, he posts a tweet and says it's just getting started, and then that's just yesterday, I think, is when he posted that, and then everybody's doing like screenshots and posting saying here's a signal, and it's funny because this morning, I don't know how many thousands of people are in there, but there were most of the big ones. Scott Melker, Crypto Rand, Mario,
Town Hall.
yeah, Crypto Town Hall. I think it's worthwhile. And again, you guys are going to think that I'm sending you to the brothel of degeneracy, but like, I think it's worthwhile to listen. I think that anyone that's been in this space for more than 6 months and has some temperament about, you know, taking what people say with a grain of salt or, you know, things like that, I think it's worthwhile to mature and listen to some of these spaces. I don't.
Oh yeah, I do.
Yeah, it gives a sentiment, and I get pushback over that from especially the most maximalist position, most logo wearing hardcores that want to beat me up over the fact that I'm not only speaking the gospel of one particular ecosystem.
That's a great analogy.
Yeah, they want to beat me up over it. And again, no harm. Again, I understand what Somi says, which is you want a cult-like following, you want the evangelists, you want the Max Kaisers that are only going to talk Bitcoin, you know, things like that, right?
Just not going to be me.
The hypocrisy is there because you meet these guys in person and you go to these Twitter spaces, and some of the ones, like I went through all of the speakers today, and the ones that are hedge fund managers and have laser eyeballs and BTC all over their profile are the exact same ones that say, hey, we got into Bonk, you know, 3 months ago, 2 months ago or whatever. And they even highlight that up until, you know, they say, well, only 3 days ago has it become easy to participate in Bonk. And that's why you're seeing this high price. So, you know, when you listen to these spaces, it's good to say, okay, this person's got 100,000 followers, 300,000 followers, 1 million followers, because they have solicited that market. And they, in I don't know if it's all over the world, but basically in Texas culture, there's something that's called a fence post turtle. And what that means is you can go down a farm road and you can see a fence post on the side, and there's a turtle on the top of it. And you're like, well, who came along and put that turtle up there? Like, how did that turtle? It's impossible for the turtle to get there. It's kind of like a phrase, a catch for a cliche in politics. And what I'm saying is these people, again, they got there somehow. They got placed there by VC. They got placed there by their consumer base, basically lifting them up, right? And then now they have the voice of gravitas. And most of the time they are, not as candid about, like in these spaces where they get a little bit friendlier with voice than they do with the tweet that they cultivate before they post, right? So I think that people should be in these Twitter spaces, if nothing else than just to be a passive listener, to listen in, hopefully not to FOMO or FUD themselves out of a particular position, but basically to get a sentiment. And, what I posted earlier before coming into voice now was, to me, again, I love these charts. I love the guy that was Sprack that was just going through all the charts. I agreed with what he was saying about Coinbase, the stock itself. I do have a question I'll ask about rotation from stock, in the crypto space, or fund like Grayscale's discount and premium versus the cash flow stuff. So I'll ask that in just a moment. But like take in the information and use that to actually create an analysis. So that's kind of my commentary on those things.
That was great. Yeah, Sprack. Do you want to comment on people rotating out of positions? And Danny's here. Danny wants to see the hex chart too, so we can look at that. That'd be great.
Yeah.
Let me clarify that question. So I heard, which makes sense. Coinbase had its launch of the IPO. It raised $100 billion, I think, or something like that, and then it almost instantly crashed, right? And it was the signal Pico top mark, right? Very similar to CME futures in the previous cycle. So you have these marks, which are buy the rumor, sell the news. Retail gets involved, and then basically gets pummeled. Now, how is that valuation calculated? I'm really not a stock guy. My last stock was National Bank of Greece, which didn't do that well. It's basically the whole collapse of the economy. And so I'm not a stock guy at all. And the shadiness about who can participate early, what is actually on ledger. That's one thing that attracts me to cryptocurrencies. But I did hear Sprack say something along the lines of 3 billion or so per quarter, or maybe per week. I can't remember what the number was.
Yeah.
So if you see that and you call it cash flow, and then you say, okay, here's a stock of a company that's generating this in cash flow, what that tells me is, if you're going to call it cash flow, that $3 billion worth of fees needs to be liquidated into actual cash. I don't know that cash flow counts as the crypto that's being basically converted into crypto through their platform of central exchange, and then stays as crypto store of value narratives. Like, is there, like almost a mandatory redemption for a company like Coinbase to liquidate their holdings, like as they go, to actually call it cash flow for stock report?
Yeah. And that's a fair statement there, Gary. You're absolutely right. What I do know is that from researching stocks in the past, typically people would go onto something like Morningstar, they'd go on Yahoo Finance, Market Watch, and then there's all these metrics, right? There's all these metrics of like cash flow, or liabilities, assets under management. How much is this company worth if I were to want to go and buy it someday? And you take that value and you say, well, how many shares are outstanding? And you're like, okay, Warren Buffett I need a 20% discount on that. Otherwise, I'm not buying it. And it needs to be able to pay me back in 10 years. Can this thing pay me back in 10 years? And that's kind of like the rough way that a lot of these older traditional guys look at that. I read, security analysis, Benjamin Graham and Dodd and all of those, the Charlie Mungers, and I did a lot of research back in the day on their traditional investments, and you could do well that way. You're not gonna blow the boat. However, one of the other branches of Coinbase that we're not seeing is Coinbase Ventures. Coinbase Ventures has been invested in a lot of these other little protocols, a lot of them, including Bonk, including some of the injective stuff, including some of the new shiny DeFi stuff. So, and in the gaming sector, they're in the DeFi sector, they're in the GambleFi sector. So I see that as well being a part of that company. And a lot of those numbers are going to start showing up because remember, they're invested in in the underlying market. They're very diversified and they hold a lot of these assets in their AUM. And so that AUM is going to start creeping up as well. And what the market watch sites are doing and the Yahoo Finances are doing and the Morningstar is these numbers are going to start to ring bells. And people like the Motley Fool, people like these newsletters that people subscribe to, and Fisher Investments. This is going to start ticking onto their radar. And what do these guys do? Well, they want to make money. They want to generate fees. They want to sell these products to their investors. They want to sell the advisory service to their investors, right? And that's where I see that once something catches on, it gets that Lindy effect where it starts to pile up. And then the more successful something is, the more people pile into it. And then you get that turtle on top of the post. And that's just my take on that.
Yeah, I'll agree. I absolutely agree with your reasoning there. What's interesting is, again, cash flow. If you look at cash flow during the gold rush of the 1800s, everyone, now as an investor makes the commentary, you made more money from selling pickaxes along the way to the people that want to go to the gold rush versus the actual gold. Although gold had its performance, right? In the 1800s, it still built San Francisco and it still had a windfall boom as far as its price perception. You still, again, like you just said, if you are an advisory newsletter selling, you need to have the 5-star rating from a Morningstar on a stock. Again, to me, that is the cash flow is almost mandatory sell pressure on the asset and on the narrative of store of value, DeFi play. Here's how you can, make money as a user. So like, it depends, right? I think that it actually made sense a lot, what you were saying about Ethereum versus Bitcoin, like these, as far as brand names are recognizable in the marketplace. Even the commentary out there is, don't expect BTC to go beyond this threshold or this ceiling, or ETH to go this ceiling, but you can still participate in DeFi, and 30x, 50x, 1000x kinds of numbers are still possible. It is again, you have to participate in this market just like any other market with a I think cynicism, but not necessarily chip on your shoulder. What I mean by that is everyone is in the influence game. Doesn't matter. It doesn't matter whether you think yourself as noble and I'm fighting for the cause. You're trying to influence. And if you think that you're degenerate and you just want to dump on people's heads, you're trying to influence. Like, it doesn't matter. You're just trying to influence. So like, paying attention to these people, us and them, without really saying there's a hard line. Like there's not a trench in between, like the influence game. I don't think. I don't think that serves very well. So like stock, fiat, dollar, crypto, it's narrative of how quickly can they participate. That's why I would like more commentary in the future. And the thing I pay attention to mostly now is not even sentiment and not really chart, although you do a great job of breaking down the charts even inside this ecosystem. I'm looking at the bridge. I have the bridge up all the time. I'm only paying attention to Dune and other things that basically feed out information about the bridge. I think it was interesting that Richard or somebody, as since it's 9 or 10 node operators, I think, that run the bridge, dropped the fees. There's not fees now, right? You can go across the bridge and try to make it painless, in perception at least, to come across the bridge. I don't know what kind of pushback there may be over the bridge restoring fees, especially once you've crossed the moat. Once you're in Pulse Chain, are you going to be pissed off if the fees change? You're going to be pissed off on the exit? You're going to be pissed off on the rate change? What are you going to be pissed off about? So like there's good things about there being no fee, but there's also like I'm trying to pay attention to the bridge narrative more than anything. What are your thoughts?
And I think that's a really good take, Gary.
Yeah, that's a
with
very
you.
good
We've been
indicator
paying
showing
really close
the health.
attention to the bridge as well, and I'm curious to see. But also, like, would you go sell your bags because they implement a 0.3% fee again? Like, are people going to leave because of that? I think that's less of a big deal. But you're right. The perception of going to no fees, and then if you implement it again is pretty negative. Yeah,
well, I mean, so it's a competitive market, but like, it's funny that we say these things are trustless, but anybody can throw up a bridge. You're going to trust it? Like you say, it's trustless, but if it doesn't have RH stamp on it, you're probably not going to trust it. Like, it's interesting that the whole narrative over the past months about the website, the go-to website, the fight between Golke and I about like, does it matter if it's 2 clicks or if it's 1? Does it make, what's it matter? Well, what it matters is it's still brand equity of the website itself operating as an interface. And so like, and it just goes again to, I try not to be too hard on the guys that today have lasers in their eyeballs on a Twitter space and BTC all over their profile and commentary and tweets, and they talk about bonk, how 1 to 2% of their assets have been in bonk for months, and they're really happy over being such a great performer. So like these are the games we all are playing.
Yeah, really good points. Really good points. Sprack, would you pull up the hex chart? We'll take a look at that here. What are your thoughts, Sloth?
Yeah, I think those are really great points by Funding Jim. Obviously, we have more options than just like the official bridge to move money off chain. The biggest one is Coast, or move money across chains. The biggest one is Coast. But I think it doesn't really get to like
is that you can't bring in big money through Coast. I had an onboard yesterday trying to bring in some really big money, and they were getting like freaking 15-20% slippage going into Pulse from CST. And so I'm like, well, we got to use the bridge. Like it was my only option. Yeah.
What was that? But my initial thought. No, you're good. That was like the tangential point. The initial point I thought of was like, obviously people can be upset if you go from a 0% fee to a 0.3% fee because of the perception, and I think that was Funding Jim's main point. My rebuttal, not to him, but to anybody who said that, is like, well, there are always fees on all bridges all the time. So if you got one swap or one bridge over that was no fees, you're net positive in that. But I definitely see how like you just change the narrative. It's like, oh, Richard's just trying to get you in. Like, what's the bait and switch? You get your money in, but you gotta pay to get out. Like I can see that
trap you in with 0.3%.
Even though if you get one bridge without a fee, that's a net benefit because that's one fee you never had to pay when there's fees on every single bridge that exists everywhere else.
I think that's a great point. That's the first time. This is the first bridge I've ever used for free, and I've used a lot back and forth between Binance and Ethereum.
Yeah, but again, I'm going to push a little bit over your Chrome browser. You didn't pay for that. You may have paid for Mozilla. I remember paying for Mozilla to use a browser, 20 years ago.
Oh yeah.
I remember buying the software from a bookstore in order to install it. But like there's a familiarity of your information feed is effectively free. You pay for your internet connection, you pay for your cell phone bill, whatever it is. But like I do see what you're saying about every bridge has a fee, just like every browser had a cost in the past.
Mm-hmm. Yeah. I do think it was a good move to take it to 0%. I think that was a good move, just to help, because you start talking into like 7 figures of moving money in and out. Like you're taking a 5-figure hit when you're doing that, and that's pretty significant. Even if it's only 0.3, even if it's only 0.3% of your portfolio of that you're moving in, like no one wants to lose 50 grand or 10 grand on $1 million moving over. That's a lot of money.
Right.
You guys already talked about in this show, or maybe a different show, about the change to the PulseX website. I think Corey Costa maybe put it out yesterday. Someone put a screenshot of the second token on PulseX. Have you guys looked at that? Do you know what I'm talking about?
No.
No.
What second token are you referring to? I'm not.
So
I'm not
the language on pulsex.com,
oh, I've seen that.
the language, there's an additional paragraph that wasn't there before that now talks about DAO and a second pulsex
I
token.
saw that. Yeah, I saw that.
I thought that was added in. I thought that was always that text was always there, if I remember.
I remember, well, what I remember, and again, I haven't looked at the website itself in a bit, but what I remember is the pushback or the capitulation really on the chart about PulseX when Richard had tweeted something about, why would you give free money and single-side staking or something like that kind of content. And I remember looking at it then, and there was no DAO commentary. There was no second token commentary, but that's, a while back. I don't know how long it's been there now.
When you're looking at, I'm looking at the website right now. I'm gonna trade you screens really quick, Sprack. It looks like they're just talking about the incentive token, are they not? You're referring to this paragraph right here, Gary?
The second PulseX incentive token. So how do you read that language?
Well, let's read it. In order to enhance PulseX's success, another token will exist to further, let me so you guys can see. There we go. Further incentivize liquidity providers beyond the fees they're already making. When they become liquidity providers, they will receive LP tokens that they can deposit into a yield farm. This is not. Oh, okay. So I see what you're saying. So it sounds like it's another token beyond the incentive token. Now choose which trading pairs receive this incentive and at what rates. Interesting.
So that language was talked about in the earlier versions of the testnet.
I remember.
And part of the reason people, participated was, you'll have DAO votes, you'll be very similar, and they're comparing it to PancakeSwap and all these other things. And then
party token, I think it was.
Yeah, so the PRT token, initial, right?
Yeah, PRT token, yeah.
And that language wasn't on the website, at launch of PulseX, and that was a lot of the capitulation of the price, I believe, was people rotating into Pulse Chain itself.
Right.
Now it is back there again. I don't know when people would look at Wayback Machine or something like that to see when it changed, but yeah. So now it is different, and that tab has always been there. There's always been pools and farms or whatever, and that tab is still there. So
yeah, they didn't never took it away. Like you would think if it was never to be part of the plan, they would have eventually taken it away, but. Yeah.
Well, and you save your ammo, right? Like you save your ammo for when it's time to shoot your shots. And I think, like everybody's been saying, I think Richard's been saving his ammo. And I think a lot of the ammo, we're going to see it with PulseX. I think there's some cool features going to be launching there. And I think it'll be, I think it's interesting. I think PulseX is cheap enough, that it's been cheap enough that one could consider buying it if that was if they wanted that as part of their portfolio.
And also, if you think logically, sorry.
No, I said go ahead. Sorry about that.
If you think about it logically, that a caliber type of person like Richard, I just can't comprehend that all these things we have been built and designed and put all the effort and time into is just gonna vaporize because it's gonna be sold to oblivion. I just can't see that happening. It's just Richard is standing in the back and doing this. Let's see.
Well, there's things. There's things.
Gary pointed out that it could be very bullish for incentive token as well. And also, Gary, can you just clarify that? As far as I remember, you talked before that there is a Hex trust or like a Hex ETF kind of thing being built at the moment as we speak. Am I correct to say that?
Well, it's very similar to a self-directed 401k. So really the go-tos as far as explainers of it, it does exist. I've exited out. Like I didn't actually put money into that. I like crypto myself, just like I haven't done crypto grayscale myself. I like holding the asset in my own sovereign ability. But if people have a 401k, and I haven't been employed in some time, so people have a 401k, they want to participate with those kinds of funds, then they could participate through the Hex Investment Trust. But again,
that's the one, Hex Investment Trust. Yeah.
The go-tos are going to know the most information are going to be RG3, whales only, and
KNTX.
Kinetics.
If you want more information about that, yeah, go dig into those guys. I don't want to get too lost into that on the show today. Let's go to the hex.
Oh yeah, sorry.
Track, and that'll be a good place to be able to kind of wrap it up. But great question, Norbert. No, totally great question.
Yeah. So as far as hex, it's very, very similar to Pulse, and it makes sense because there's like a liquidity bond between them, and I think that was by design. Richard did that on the pools, and also it's the overall ecosystem. It's people that are taking profits on Pulse and putting them into Hex, or taking profits on Hex and putting them to Pulse. So I see them kind of operating in tandem. The area that I'm looking at right now that's kind of a critical is this 236 fib level, which has been acting as a resistance level. And also we have this local downtrend. It's kind of gray because it's on a lower time frame. But once we get cross above this level and start to trade up above this level, I think we have a fair value gap to get back up to some of these all-time these local highs that are up here in the 2 cents. So if we could break up above this trend line, typically what happens is you break a trend line like this that's been established for months now, and once you break above it, what ends up happening is you start attacking the highs of that range. And then once you start attacking the highs of that range, then you could trade below. And then what happens is you'll end up using something like this as your future support. So this 50% could become like future support. And then again, we'd be looking to trade up above it, level to level, take out this boss, go after the next boss. We can't predict 2 or 3 moves into the future. We could just like one step at a time. Right now I'm focused on this level right here. If we can break this level, that's really bullish for me. That means that this trend line, this overall uptrend is going to be respected. We trade above it, this becomes your new support level. We trade above it, that becomes your new support level. And
what if
so
it rejects?
What if it rejects?
Yeah, I want everyone to sell. Go buy Titan X. I want a DCA this month. So what if it rejects? Give me my best scenario. I want to buy.
I mean, your best scenario is that it rejects, and we come back and test something where you see this candle here with the long wick, and then it got rejected, and half of the body is up here. That tells me that there's a massive amount of buys that took place here. They wouldn't let this candle close down below. So when you see some of these wicks, this one's long to the upside. Well, that means that there was a lot of sellers in this area. And so the wicks kind of tell you a lot. The wicks tell you that there's a bunch of liquidity down here waiting to buy this up. And so, yes, the probabilities is that we dump down. There's probabilities that we hold up this level, but I'm seeing the market do its thing, and I'm seeing the market buy this up around this trend line, around the 007, 008 kind of region. I don't think we get below there. There would have to be a massive capitulation to get below there. And it's typically not what you want, Gary, because if that level breaks, then again, we just broke this trend line. What happens when you break a trend line? Well, it's going to go and attack back here into the 003s. And that's something you don't want.
Got it.
That's great. We are here for this exciting. I think this is probably a good place to wrap. Is there anything, Corey, you wanted to cover before we jump off today? We've been going for almost an hour and a half.
Yep. Wednesday next week, we got Crypto Coffee coming on. I got him locked down on the actual day he's going to come on the show, so that's going to be a fun time. Tuesday will be off. I am flying to Arizona from Puerto Rico, going home for the holidays. And, it's a blessing to have all these guys on today. Hey, Slop, why don't you go ahead and shill your NFT project? I know you got an NFT project coming on today. Am I not mistaken about that?
You are
really quick before you do, Soft. Yeah, just really quick, one more second. You guys that are here, there's a ton of people, so make sure you're not leaving. Make sure you check out Sloth's stuff. It's really cool what he's building there. And also, we're going to be pivoting all of our stuff over to Corey's channel. We're going to be rebranding that as the DeFi Crypto Alliance channel. So make sure that you're subscribed over there. Make sure you like on your way. All this stuff helps pump the algorithm. We're here to pump everybody's bag. So make sure to do that. We're going to be moving everything over there, and we want to make sure we bring everybody with us.
Hit the like and hit the subscribe on your way out, please.
Make sure you follow these guys wherever they go. They do great work in the community. But yeah, today at 4:30 p.m. EST, my mint will go live for the digital DeFi digital sloth DDS NFT collection. So yeah, I'm super pumped about that. Really excited about it today. Was kind of going over the contracts this morning, making sure everything's good to go, and everything's set and ready. So yeah, I'm just kind of waiting for the time. But there's 369 of these total. In the first hour, when the 4:30 pops around and I open it up, there'll be 50 available for free. I've already taken the snapshot. So if you hold 69420 HOA by about 8 a.m. EST this morning, then you're on that list. If you're not on that list, and once this mint's out, there will be about 319 available for $1 million pulse each. And this NFT collection, it's as of mint, it's a no utility NFT collection. It's just about the art at the start. First, all the art's hand drawn. So even from the backgrounds to each individual trait, it's all hand drawn by a artist I hired. Really, really great work. I like it a lot. But what you're doing is when you're purchasing one of these NFTs is kind of like what I say here. Through ownership of this NFT, you're participating in the Crypto Sloth brand and provenance. So this is a way for you, if you like the work that I do, you like the education I provide, and you spend a lot of time on my channel, and you want a piece of the brand, and you want to own an asset that is associated with the brand and the provenance that I have created here on YouTube and Twitter, this is how you do it. And so, whether or not there's utility in the future, I have some ideas and whatnot, but I see these as a way for you to show on the blockchain that you support me. And it provides me with a one-way funnel to you, to the people who have on the blockchain verifiably shown that they've supported me. So that's kind of like the pitch of the NFTs. It's a social token. It's a brand NFT, and I'm really excited to build on top of this in the future. And I'm really excited to see what happens this afternoon when it goes live. Thank you guys for letting me talk about it.
Talk about the rule of three really quick, Sloth. I thought that's good.
Yeah, so the rule of three, props to DCC, Dollar Cost Crypto, for originally talking about this. But I wrote an article on cryptosloth.info about a risk management tool for when you're buying into an NFT project, and it's called the rule of three. And long story short is you buy 3 NFTs whenever you want to get into a project, and each NFT has a very specific reason. The first one is to take your initial out. So let's say, for example, you have the 1 million pulse for mine. When you get to 2 million pulse on the secondary market, you can reliably sell it for it. You sell that first one to get your initial principal out, maybe between 2 to 5 million pulse if you wanted to get some profit. The second one is for profit selling. So sometimes NFTs go absolutely crazy, and they go up in prices way higher than you expected. For example, one time I bought a NFT for 0.3 ETH. Sandbox NFT. I sold it for 0.9, thinking I was a genius making a 3x. 2 months later, I look and it's 3 ETH. Right? If I had more than one of those, NFTs, and I sold one for that first 3x to get my initial principal out, well, I would have had another one to sell when the major prices come up. When the major prices come, and so that's what that second NFT is for. It's the major profits, and then the third one is your hodl bag, because with NFTs, they usually provide you with some utility. In my case, they provide you with ownership into my brand. And so if that's something you want to hold long term and you have a vision for that beyond any specific market cycle, and you want the perks of whatever that NFT gives you over time, independent of price, that third one is to make sure that you're always still bought into the community and you have access to whatever that NFT gives you. So you have one for initial investment, you're de-risking, one for profits, and then one to hodl to participate in the community.
It's a great strategy. I love it.
And then I see we got, let me see if I can drop the link into the chat for you guys.
The guy, when he's freaking out there, the sloth, that's how I felt this whole bear market, man. That's the feeling I've had for the last year.
Yeah, so there's some, actually, I'm going to drop this in the private chat. I can't put links into the chat.
Yeah, put it in the private. I'll put it in the main chat.
Yeah. So some cool thing. Like I really personalized this collection, kind of around me and like the things that I do. So like you'll see like there's a dentist white coat here with like the little dental handles and a toothbrush. Because I just finished my fall semester of my last year of dental school, so I only got one more to go. I'm on winter break.
Nice.
I got a break. You know, you got Loops here, some orange eyes, a little shout out to the Tang gang. Obviously, laser eyes, a little homage to Bitcoin. I do jujitsu, so that's like a rash guard, and I'm a blue belt in jujitsu, so it has that. So there's like little fun Easter eggs, just kind of me throwing my personality into this collection, and yeah, I'm excited for where it's going to go. Today's just the launch, but I'm really excited for what I can do with this collection, because I really see it as kind of a reflection of myself and the skills that I'm building just on the blockchain. It's like a mirror of me. So as I learn, grow, and develop skills, I want to find ways where I can reflect those that personal development onto these NFTs.
And is that at 5 Eastern? What time is that?
That is 4:30 p.m. EST.
4:30 Eastern. Okay.
And then let me drop you a link to the Twitter space, because the Twitter space starts at 3:30 p.m. EST with the Free Mint Friday with the Tang Gang, and then I'm on the second slot of that. So I'll drop that link in here too, so that they can have that. Yeah.
Well, we support you, Sloth.
I appreciate that. I appreciate you letting me talk about it on your platform. Thank you so much, guys.
Sure, man. For sure.
But yeah, if you want to support me, that's a very easy way to do it, and you'll get a little Sloth token in your wallet as well.
Love it. Gary, how about you, man? Do you want to shill where people can find you or anything else that you got going on?
Yeah, so 2024 is going to be a great year, I think. You know, here's what's going to make it a great year. If you're getting out there, if you're getting out of the trench, if you're getting out of the bubble of the people that are just affirming what you have to say, like if you're getting out there, it's going to be a great year. 2024 is going to be a great year. I like that Sloth, you know, his content, his brand over time. He's really leaned into this NFT world. I think that is vocabulary that is outside of only the one blockchain or the one brand of hexagon logos. So I like what Sloth is doing there. And, you know, it gives ways to, like I said, this past week or so, I was in Art Basel and all these different events. They talk more about this kind of content than they do about one particular blockchain. They know about crypto. They heard Bitcoin and Ethereum, but like they talk more of this kind of content than I expected. As far as stuff that's coming up, the next thing that I'm planning is possibly with RG3, but maybe solo, is the Barrett Jackson car auction in Scottsdale. That's January 20th to the 28th.
I'll be there.
So if you're going to be there, then yeah, Corey and I should make some content while we're there.
Yes.
It's 25th, I think it might be the 25th, 26th, 27th. I can't remember the dates, but the last 3 days is the VIP element. And Kyler, which is a crypto guy here inside the community, the actor guy, possibly we may be able to bring the altcoin twins out. Not really sure. They're working on if that's possible. And some other things. I'm just trying to do more brand affiliation outside of the people that we already know. Like that's the goal. But yeah, that's my next thing. And then everything else is going to be, I support the Tang Gang people. I think that they're great people in a lot of ways, mostly because the ones that are almost always in the spaces and kind of seem to be leadership in the spaces, they're really trying to get outside of this one bubble of communication. So I like that. That's what I want to support. That's why I support channels that aren't this ecosystem only. That's why, you know, if they make some kind of product, physical product, anything that you can do basically to support creators, content, or bridgers, that's more important than anything. So that's all.
Cool. How about you, Sprack? You got anything going on, or do you want anyone to know where you're at?
No, I'm just on Twitter, just trolling people. That's all. One of the things that I do is engage with a lot of the hex haters, if you will, and a lot of them they're just kind of regurgitating what they've heard before, like what they've heard other influencers say, and they don't have all the facts, and they're just kind of like spewing lies. And so it's good for any of us that
just like Maxis.
Yeah. Just if you know the truth about something, don't be afraid to correct somebody and do it in a polite way, because I most of the rebuttals that I see on there are like, you know, go home, loser, you don't know anything. And it's like that right. that person doesn't walk away with anything. If it would be good for you to say, no, look at this is what's on chain and this is what we're seeing, and you should really take a look at this ecosystem and come at it from like a positive point of view, because I think we're our own worst enemy in that sense. Because when you've overperformed, and I think I've said it before, that Hex is a victim of its own success, meaning that it did a 10,000x on the last write. And so when you do this massive pullback back to a penny, it was trading at 0.0000 pennies. So when you do that run and you come back all the way 90%, it looks like a failed project. Well, guess what? AOS was also a 99% drawdown. So was ERN. So was TVK. So was countless others. And they are all kind of making a comeback now. And that's what I'm noticing in this past month, is some of the lower liquidity coins that we've been waiting for are starting to get a little bit of a run in the cycle. And that gives me a little bit more positive outlook on Hex and the RH ecosystem. Again, just go back. And if you see somebody saying something that's not true, please correct it, and please do it politely, because you're going to catch more bees with honey than with vinegar. And also, like, again, be technical. There's people that have these really technical questions. They're like, oh yeah, well, what makes Hex different from some other DeFi, protocol where you earn yield and this and that? And it's like, that's where you need to step in and say, wow, well, perfect question, because in Hex, you actually don't give your coins away to somebody else to hold them for you. It's actually you're burning the coins, you're minting them back with this contract called the T-share, and it's you and the code. It's immutable. There's no one in the way. There's no middleman. It's sovereign. You write the contract with yourself. You are bound to that contract with yourself. It's a truth engine. All of the good things that are to be expressed about that ecosystem. And then I've actually said that to someone, and they're like, huh, I didn't even know that was the case. How come no one told me? Again, it's like all we hear from people is telling the other communities that they're stupid, or that they lost and they don't know any better. And I think we need to just take the high road and just be intellectually honest with what it does, what the code does, what the pricing does, and what is possible on this next cycle. And that's all they want, because a lot of times they don't have all the information, and it's being gate kept. Make no mistake about it. It's being gate kept. So it is up to the community to start spreading like the truth about what you could see on chain, and you go from there.
Nailed it. Beautifully put. Well, thanks everybody for being on today. Thanks for you guys in the comments. You guys make this show what it is. We feel blessed to be here with each of you. With that, have a great day, guys.
Peace.